Good morning. This is Larry McMillan with a market update on Monday, December 7th, before the market opens. So on Friday, most of the major indices, QQQ, NDX, even the Russell, of course, S&P and the Dow all closed at new all-time highs. So the market has strong upside momentum right now. And we're in a seasonally bullish period of the year, usually, especially the last part of December. So if the bears are to do anything, they would have to try it right now. But we don't have any sell signals, so we're not really expecting much in the way of bearish action. We're remaining bullish. The S&P chart has support at 3,600, then at 3,550, 3,500. We're raising our definition of the continuation of this bull market to the support level at 35.50. If that is broken, that's probably going to cause some relatively severe selling, at least on the short term. But there's no indication that's going to happen. The put-call ratios continue to plummet. Call buying is extremely heavy in the speculative market. The CBOE 21 CBOE equity only put call ratio's 21-day moving average is at an all-time low. Our database on that one goes back to 2001. The total put call ratio, which is all stock options and all index options, is at a 20-year low. Our regular ones that we look at, the standard ratio and the weighted ratio, are plunging as well. The standard ratio is almost down to the September lows, which in turn were 20-year lows. So historic levels almost in the put-call ratios. As long as they continue to decline, though, the market will be able to rise. It's only when these ratios roll over and start to rise, to go up, then we would have problems. Breadth has been spectacular, continues to be one of the stronger areas of the market. Both our breadth oscillators are on buy signals. Cumulative advanced decline lines are making new all-time highs, both in terms of New York Stock Exchange and stocks only data. And cumulative volume breadth is also making new all-time highs. So those are all very positive things. New highs dominating new lows. On Friday, the differential in NASDAQ between new highs and new lows was 407 issues, which is historically one of the largest readings in history. The only thing that's not really jumping on this bandwagon is volatility, but it's still bullish. I mean, VIX is still in a downtrend, so that's bullish for stocks, but VIX is still at 21. So that means there are people buying puts out there that have some worries, especially extending out into January, February. Whether those worries are COVID related or economy related or just overbought market related, it's unclear. But that's a little bit of caution there. The term structure of the VIX futures flattens out after January. It would be more bullish if it were rising, but it's not right now. So still, all in all, a very bullish setup. And so we're remaining positive as long as S&P holds above 35.50. I invite you to join our Saturday webinar this week. We're going to be finishing up our 14 Saturday series of educational and informative webinars. We'll start out with a market discussion, then have a question and answer session, and then we're going to have a webinar on what I call other useful approaches that we can use that we haven't covered so far in the previous 13 webinars. So it's kind of wide open. There'll be a few things that we're discussing currently, looking ahead into a market which next year might be running into trouble, but right now is not. So thanks for watching, and have a great week trading.